Welcome back once again, options traders. Well, another good question for the group. What is the options race against? Now, I'll give you a little hint here. If you were to ask most traders, they're going to say, well, that's simple. The options race is against time because options are a wasting asset. And as soon as you buy it, we have theta that kicks in. We need the stock to move quickly. Well, that's partly true, but that's really missing the bigger point. So what is the options race really against? Well, let's go find out more. As always, before we do, please be sure to click like and subscribe. It's greatly appreciated and definitely helps to promote the channel. So when it comes to options trading, at least from the buy side, there is a common tactic. And that is that traders will use technical analysis primarily for shorter term trades, fundamental analysis, and news to gauge the stock's direction. And I hear this a lot from traders. Well, I just read on CNBC this is going to happen, so there's a good chance that the stock is going up. And then they will primarily use technical analysis to find the best entry. Does it look like maybe today is a better day? Maybe should we wait a day or two? But they'll try to zoom in on it by using technical analysis. But everything focuses on the stock's direction. Well, if that's the common tactic, what is the common belief? Well, traders think that options are a race against time and that they need the stock to exceed the break-even price before expiration. And there's no doubt that there is some truth to that. We do have direction, magnitude, and speed being time, to be profitable from an option. But there's really more to this time than people realize. The bigger issue is not that time is passing once you buy the option. It's more about the speed of information. And what I mean by that, the race is against time, but not from theta, at least to the degree that people think. The race is against other traders getting the information first. Remember, other traders know the same information too. Trust me, if you read an article on CNBC, you're not the only one. You're not the only person who knows that NVIDIA's earnings are coming up. You're not the only person who knows what the implied volatility is or what the historical volatility is. Everybody knows that. So remember, as I always remind traders, you can't beat the averages by doing what the average trader is doing. So it doesn't really make sense to say, oh, I have some pretty good information here that this stock is going higher. Let me just go buy calls. Because again, everybody knows that. And yeah, I know there's a lot of people say, well, there's always a new group of traders who comes in that doesn't really know that. Well, but they don't last long. The real market is made by professionals and people who do know. And so again, don't expect to beat the averages by doing what the average trader is doing. Instead of thinking about theta being the main component, the options game is really about volatility. So in other words, when you buy an option or shares of stock, somebody has to sell it to you. That's true of any trade. There has to be a buyer and a seller. Well, sure, you've got some idea why you want to be the buyer. And it's easy to think that you're the only person who knows because you read an article on CNBC or your broker's platform tells you that volatility is at historic lows. Everybody knows that, including the seller. So the question isn't, oh, the option's going to decay after I buy it. The bigger question is, when you buy it, is all of this information that you think is going to be so beneficial in making you profitable, is it already incorporated into the price? Do you have a really good belief to think, well, you know what, the seller probably knows this information too? And if so, you need to be careful because this is where the real race is. Who was in possession of the relevant information the earliest? So to show an analogy, let's go over to a betting website. All right, so I'm on a website here for USA Today, sports data, and we can see some upcoming football games. So let's just run through some of the lists here. Let's take a look at the Lions. All right, so you can see that the Lions are 8-1, and the Jags are 2-8. So you might come into this football game and say, oh, well, I'm going to bet on the Lions because I think they're going to win. Well, this is my whole point with the options. everybody knows that the Lions are 8-1. Everybody knows that the Jags are 2-8. It gets factored into the prices. And so we can see it over here. These are different types of bets. But if you look at the spread bet, Lions minus 14, that means the Lions have to give up 14 points at the end of the game before we compare scores to see who wins. We can look at the money lines. Now they're both here at minus 110, which means regardless of which team you bet on, you would have to spend 110 to win 100. That difference being the juice or the vig for the sports book. Now the reason that these are the same is that theoretically they've been leveled out by the spread. But if you look at the money line over here, take a look at this. Minus 825, you would have to spend $825 to win 100, or if you bet 100, you would win 575 by betting on the Jags. So the point is that because everybody knows, it gets factored into the prices. So instead of saying, well, I think the Lions are going to win because they're 8-1 versus 2-8 for the Jags, that's not really the issue. Because again, everybody knows that. The issue is over here. Are these prices in line with those expectations or with your expectations? That's what you have to do as an options trader, is to say, it's not about what I think is going to happen in the future, but before I buy that option, has that information already been built in to the prices? So how could we do that in a broker's platform? Now we're into the E-Trade platform, and for instance, let's go to the quote screen. Right, so here's NVIDIA, and I can see the historic volatility here in blue. I can see the implied volatility in orange. So the issue isn't necessarily, I think NVIDIA is going up or I think it's going down. The question is that information already baked into the prices? Because even if you're right about the direction and you overpay for the bet, just like with a football bet, you're going to lose. So we can see that the implied volatility is quite a bit higher than the historic, but if you just look at the orange line compared to itself, or at least the current point over here, it's not really out of line from the lows and highs. It seems to be trading at what we might call normal volatility, or normal implied volatility for NVIDIA. Now we can also go over here to the options. We can click on the implied volatility constellation. Just slide that little click on that button right there, and look at this. The solid line shows the implied volatility. The dotted line shows the 30-day average. So why do you think we have such a big bump right here? Look at that. 76% for the implied volatility versus 62% average. What's going on here? Well, this is for November 22nd. If we go back to the quote screen, we can see that earnings are on 11/20. So again, this is a perfect example. You can't just say, oh, I think earnings are going to be great. You have to say, has it been priced in? And to do that, you need to understand historic volatility and implied volatility. So the next time that somebody tells you that options are a race against time, it is true. We do have a speed component to them after you've purchased the option. Theta is part of the consideration. But before you even enter that position, whether you're a buyer or a seller, back up a little bit and say the bigger issue, or at least the first one I should consider, is if I am in possession of that information before anyone else. That's really where the speed is. And if you're reacting to information that everybody already knows, you need to understand that theta is going to be the least of your worries. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a Candlesticks and Technical Analysis course. You can find it all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.